This video is for educational purposes only. They are not telling you what is really happening to silver and copper. And by the time they do, it will already be too late. Welcome back to SHF Money. If you are new here, hit that subscribe button right now because what I am about to show you is the kind of information most people never get to hear. Like this video while you're at it. This is not noise. This is the signal. Right now, the biggest wealth transfer in commodity history is already in motion. Not coming, already happening. And the people on the wrong side of this trade are going to feel it in ways they are not prepared for. Here is what you need to understand. Getting metal out of the ground is not easy. It is not just a matter of finding a deposit and starting to dig. You need permits. You need years of exploration. You face protests, environmental challenges, government interference. There was a mine in Canada that had to be shut down before it even opened because of groundwater concerns. One mine, gone. And that story repeats itself over and over and over again all around the world. So here's the math that nobody in mainstream finance wants to talk about. For every single exploration title that gets filed, only 1 in 100 becomes a real project. And out of those projects, only about 20% ever get built. 20%. That means 80 out of every 100 potential mines never happen. Never produce a single ounce. Never add a single pound of metal to global supply. And the world still needs all of that metal. The demand does not care about your permitting delays. The demand does not care about your environmental protests. The demand does not care about your financing problems. The demand just keeps growing. Now here is what happened while the world was not paying attention. The big mining companies, the ones with the resources to actually build new projects, made a decision. Instead of going out and finding new deposits, they just expanded what they already had. Expand the existing mine, lower the cost per unit, keep squeezing the same rock for more silver, more copper, more output. And that worked for a while, but you cannot expand forever. At some point you hit the wall. And right now in silver and copper, they have hit the wall. Finding a primary silver project anywhere in the world today is like finding a unicorn wearing a tuxedo that can fly. Those were not my words. Those were the words of a mining engineer who has spent decades in this industry. A man who knows these numbers better than the analysts on Wall Street. And he said it calmly with complete conviction because the data backs it up. There is no new supply coming. There is no pipeline of projects ready to save the market. The cupboard is empty. Now combine that with what silver has become. Silver is no longer just a precious metal. It is not just a store of wealth people buy when they are nervous about inflation. Silver is now one of the most critical industrial metals on the planet. Every solar panel requires silver. Every electric vehicle requires silver. Every piece of advanced electronics being made right now requires silver. The green energy revolution is not coming. It is already here, and it runs on silver. So you have a metal that the world suddenly needs more of than ever before. And at the exact same time, the supply side of the equation is broken. Completely broken. Years of underinvestment, years of no new mines, years of squeezing the same deposits until there was nothing left to squeeze. And now the bill has come due. This is what the mining engineer called paying the piper. You borrow time by avoiding investment. But eventually the piper shows up at your door. And right now, the piper is standing at the door of the entire silver market. Now the same story is playing out in copper. And copper is big. We are talking about 23 million tons produced every single year. This is a massive market, bigger than gold by some measures. And copper is the backbone of economic growth. Every time an economy grows, it needs more copper. It is nearly a one-to-one relationship. You want to build more infrastructure, you need copper. You want to expand your power grid, you need copper. You want to roll out AI data centers, robotics, electric vehicles, you need copper. There is no substitute. Google is spending billions on AI infrastructure right now. Microsoft is spending billions. Amazon is spending billions. Every single one of those billions requires copper wire, copper components, copper everything. And behind that AI race is an existential urgency. These companies are not spending this money because they want to. They are spending it because they have to. He who has the smarter computers wins. And he who wins controls everything. That is the level of urgency driving copper demand. And the supply side of copper looks exactly like the supply side of silver. Years of underinvestment, no new major projects. The same wall, the same reckoning. Now here is the part that makes this whole story even more powerful. The world is deglobalizing. That word gets thrown around a lot, but most people do not understand what it really means for commodity markets. For decades, the global system was built on efficiency. Get the cheapest materials from wherever they were cheapest. Ship them wherever they needed to go. Trust the supply chain. Never worry about where your copper comes from. Just open the refrigerator and get your ham sandwich. It was always there. But now every major government on Earth is staring at their supply chains and sweating. The United States is worried, China is worried, Europe is worried. Because these metals are not just commodities. They are the foundation of economic survival. And when you suddenly realize you cannot take that foundation for granted anymore, you start stockpiling. Look at what is happening at the COMEX right now. Copper inventories in the United States are rising to record levels. China is stockpiling copper at the same time. And people look at the rising inventories and say, there's no problem, there's plenty of copper. But that is exactly backwards. Rising inventory is not a sign of abundance. It is a sign of panic. Think back to the early days of COVID. What was the first thing people did when they got scared? They rushed to the grocery store and bought every roll of toilet paper they could find. And then the grocery store shelves were empty. That is what you are watching happen in copper right now. The inventories in private hands are going up because the people who need copper for their factories, their products, their industries, they are terrified they are not going to have enough. The supply at the source is the problem. The hoarding is just the symptom. Now let us talk about the elephant in the room, price suppression. If you have followed silver for any length of time, you already know this story. JP Morgan paid a $920 million fine in 2019 for manipulating precious metals markets. 3 employees went to prison. That is not a conspiracy theory. That is a court of law and a public record. But what most people still do not fully grasp is that the suppression runs deeper than just a few bad actors placing fake buy and sell orders. The entire futures market structure was designed to manage price. The COMEX was built deliberately to control volatility and keep commodity prices in a range that suits the industrial users, the governments, the big players. Nobody with real power wants silver at $300 an ounce. Nobody with real power wants copper at 5 times current prices, because those prices would break their cost models, their supply chains, their margins. So the system suppresses price, and it has worked for a very long time. But there is a problem. Right now, there are 400 million ounces of silver contracts on the COMEX. There are only 100 million ounces available to actually deliver. 4 contracts for every 1 ounce of real metal. Imagine you own a pizza shop. You have 400 orders to fill. You have ingredients for 100 pizzas, and all 400 customers just walked through your door at the same time. That is the COMEX silver market right now. The suppression worked when it was just paper pushing paper around. But when the physical demand shows up at the door demanding actual delivery, the game changes. And that change has already started. JP Morgan is unwinding their short positions. They are not doing it slowly. They are doing it as fast as they possibly can without triggering the exact crisis they are trying to avoid. Because they know, they have always known, the suppression had a time limit. You can hold a spring down for years, but the moment you let go, it does not slowly rise. It explodes. And this is the key point. This is why this cycle is different from a stock run or a crypto pump. When a suppressed stock gets released, it goes up, and then it comes back down when the speculation fades. But when a commodity with a structural supply deficit gets released, it goes up and stays up. Because the only thing that fixes the supply problem is higher prices held for long enough to incentivize new mines. And new mines take 10 to 20 years to build. 10 to 20 years. That is not a trade. That is a decade-long shift in who has wealth and who does not. This is not marijuana. This is not meme coins. This is not a get-rich-quick story about something that might work. This is about metals that the world cannot function without. Metals that are running out in terms of accessible supply. Metals that governments and corporations are now racing to secure at any price. The mining thesis has been correct for 10 years. The only thing that was wrong was the timing. The suppression lasted longer than anyone expected. But every day of suppression was another day of zero investment in new supply. And now we are staring at a supply gap that cannot be fixed quickly. The longer you suppress, the higher the eventual price discovery, because the deficit only grows while you wait. Here is where you are right now. The cycle has already turned. The institutions already know. The smart money is already moving. The signs are everywhere for anyone who knows how to read them. Rising inventories as nations panic hoard. Major players unwinding their short positions. Governments slapping tariffs on metal imports to protect their supply chains. Companies spending billions to secure copper and silver access before prices reflect reality. The question is not whether this is happening. The question is whether you are going to be on the right side of it before the rest of the world figures it out. Because once this story breaks into the mainstream, the opportunity to get in early will be gone. You will be reading headlines about silver and copper instead of being positioned before those headlines are written. The people who understood this a cycle ago changed their financial lives, not by gambling, not by chasing something speculative, by understanding a structural problem that had one inevitable outcome and positioning themselves early. That same window is open right now, but windows do not stay open forever. The supply problem is real. The demand is accelerating. The suppression is breaking down. And the cycle that plays out from here will be one of the longest and most powerful commodity bull markets in modern history. You can watch it happen to someone else, or you can educate yourself, understand the structure of this market, and make decisions that could define your financial position for the next decade. That choice is yours. But the time to make it is not after the move. The time is now. This is SHF Money. Stay sharp.